Well, good afternoon, investors. Welcome to the first edition of Bull Sessions for the month of December 2023. My name is Mark Robertson. I am founder and managing partner of Manifest Investing. I'm joined here by a couple of very dear colleagues, and it's just a tiny bit blustery, a tiny trickle of snow this afternoon. But my friend to the north, Ken Kavula, says that he's got sunshine and he's headed for 55 degrees. Good afternoon, Ken.
Good afternoon. I'm reading a note from Len. I know that I'm going to regret this because it's going to be very obvious when somebody tells me the answer, but Len, I'm not recognizing the ticker TPL. Help me out.
Oh, Texas Pacific and Land.
Oh, it's a REIT. Okay, I got it.
It's one of his Permian Basin gems.
Well, he says it's getting hammered today, so.
Well, I thought they got all their issues in court taken care of.
Well,
maybe that just took the foot off the brake.
And our friend Sandy Castor is sitting in the Buc-ee's parking lot listening, Mark.
Excellent. And we're also joined here by Matt Spielman of Houston. Good afternoon, Matt.
Good afternoon, Mark. Good afternoon, everyone.
And Kim may join us at some point during the session.
Hey, I'm here. I'm getting called in and out because of if I disappear, it's because of jackhammering on my balcony.
So do you wear a hard hat around your condo? Construction safety glasses?
No, it's just, you just never know where. I mean, they worked on my balcony and jackhammered up all the tile that was on the balcony, and then they jackhammered between my condo and the condo next door on the balcony. Now they're doing it on the other side. They just don't do anything consistently all at once. They love to, spark a little sunshine of noise.
Now, are any of these products from installed building products, or are you policing that aspect of the job?
No, I'm just policing the aspect of there was a leak through the concrete from one of the planters, and it leaked through the concrete, through the rebar, which makes hydrochloric acid, and it dripped on the top of my car. So I had to get a new paint job on the top of the car.
That doesn't sound good.
It's done now. Looks great.
All right. Well, good to hear from you. Good luck with your on your project logs. All right. So Ken, I just threw a couple things into the hopper for today. An interesting bounce in tin cup with the November market, and pretty good start to this month. Did want to take the opportunity to tell the audience about our Getting Started trilogy, which is about a month away. And also wanted to take a look at, we continue to have strengthening results in the Groundhog Challenge. A whole lot of millionaire groundhogs now. We didn't have so many of them 5 weeks ago, and that's a good thing. And then we'll do our first monthly update, because I think you're going to allow me today, right, Ken?
Yeah, well, you can do it once a month, Mark, okay?
Now, and also at risk of jinxing us, the rabbit is raising a glass in our general direction, and that is in celebration of the best small company results so far. So,
well, after about the last 15 months, we can use a toast like that, Mark, okay?
A little bit of Michigan IPA, maybe. All right. So let's go ahead and get underway. Here's our weekly reminder that Portillo's is not a sponsor of this session, but they should be. It's also a reminder that, and Matt, this one might be closer to you. I don't know. Another Portillo's announcement, this time for Fort Worth.
Yeah, it's not bad, but still, Katie, we'll get down to Katie's. I think it's next summer they open up.
All right. Just trying to think.
Mark, this says Arlington, Mark. Isn't Arlington up by Dallas?
Yeah.
Oh. Well, I need to spend.
We're on the north side. I mean, that's 3 hours from me. That's not that bad.
All right. Well, I need to spend more time in Texas, apparently.
We'll all be in Chicago before then.
Including San Antonio.
Yep.
San Antonio is definitely on the list. Anyhow, hey, Matt, have you ever looked at in Chuy's as an investment?
I did. Chuy's is my in-laws' favorite Mexican restaurant. So They're nice. Nothing wrong with Chewy's. It hadn't excited me about it. I have no idea at this point where they are in their national expansion, but very good place to eat.
Okay. Need to keep that on the hopper. I set them aside, leaving the money on reserve for Torchy's at some point in the
Yeah,
future.
I'm still waiting for that. I did start a American Business Journal subscription to try and get a little bit more into the regional aspect for small companies. I keep thinking they might break something, but I've not heard anything in a number of months on that.
All right.
I'm glad we don't have many cardiologists that listen to our broadcast, Mark. Okay.
Well, welcome to this edition of Investing with Your Stomach. All right. Let's get the legal paperwork out of the way. No investment recommendation is intended here. This is entirely about education, demonstration, and illustration of the philosophies, methods, techniques, approaches to analyses championed by the Modern Investment Club movement, as championed by the National Association of Investors, also known as Better Investing, or as interpreted by us at Manifest Investing. So you're going to hear opinions from us. Please make sure to do your own homework before you make any investment decisions. The roundtable is, well, I guess it's a month away now. We're going to do it just after the first of the year on January 2nd, I believe. And if you'd like to be reminded about that monthly webcast, please send an email to ncavula1@comcast.net. If you have any other follow-up questions, my email address and Ken's email address are right there staring at you. Anything else?
Yeah, Mark, Natalie has given me permission. The audience for Bull Session and a lot of our audience for Roundtable are pretty experienced people, and they have a lot of investing years behind them, and they don't often look for things that are meant for novices and people that are brand new to the whole better investing idea, the whole manifest investing idea, the whole investing idea, period. And when we get to our new special program that's coming up in January, Natalie says we're going to have some people that aren't on our guest list that maybe would like a link, and maybe you in our audience would be able to direct people to Natalie's email address if they say that they heard about a beginner's program coming up. And could she send them a link? She'd be glad to send them a link. And the link that she's going to send can be copied 100 times and sent to 100 different people, like those old chain letters if you want. Or you can send it to an entire club, or you can invite anybody you want. There's no membership required. There's no fee required. The program is completely, absolutely free. But the target audience is a novice audience, and you'll see when we describe the program that's coming up. So if you think something like that might apply for people that you know, jot her email address down right now of ncavula1@comcast.net, and then she'll be glad just to send out that link as many times as she needs to.
Yeah, and the one thing I would add to that, because I've already begun collecting up some of my favorite materials of teaching beginners over the years, is even as an experienced investor, and if you were to attend, what you may come away with is a few nuggets that you can use to help somebody new to your investment club or that sort of thing. So, and plus, we all learn every time we do this. I learn every single time I put some thoughts together, especially for an audience like that. So good stuff. All right. Here's our weekly look, and Ken was right. The value line weekly lag, because they're basically a week ahead when they turn in their homework. And when the market is moving as fast as it has been, Ken correctly predicted that the value line median appreciation projection was going to be somewhere down in the vicinity of where it's at now. So, Ken, you can give yourself a gold star.
Hoorah! Okay.
It did sink down into here. Basically, the situation, we're going to see this in a minute with the Magnificent Seven. the market basically is recovering back into that slightly attractive area. There's less things on sale, kind of approaching that long-term trend line, but it's not dramatically overbought or oversold, in my humble opinion at this point in time. The median appreciation projection that we put together, or projected annual return, is closer to 10% than it's been in quite some time. Any other thoughts here, Ken?
No, I was surprised. I did some rebalancing of one of the IRAs today, in between fixing Santa Clauses and snowmen, and came to the conclusion that this was a pretty decent time to buy some of my old standbys. Market pulled back a little bit today, but my par was down at 10.2, I think, and that's as low as I can remember it in the last couple months, if I'm keeping it in my mind correctly.
Yeah, it's been a couple of years since it's been below 10, so
Yeah.
we're back at that level. Nothing major here. This is our performance perspective slide. The only thing that really switched around, Fastenal did drop down below the 10 cup demonstration portfolio. So our seventh stock is actually down into the group demonstration land here. The one major thing, and this is bigger than it looks like, is down here on the lower right. If you think back or go back to the presentations that we've been making for the last year, the medium and smaller companies have been, -2, -3 on the relative return, and that is changing and changing fairly rapidly. Keep in mind that you are talking about and looking at a 30-year geometric average. So a 1% move in that is a pretty big move in the general characteristic being measured. So those are moving up, and as we have suggested, that over the long term, we certainly didn't expect it to get fixed in a month or two, but the way things are going in the market, we do expect the small and mediums to move up. Any other thoughts here, Ken?
No, but this is just a graphic display of how decent stock picking can really improve your returns. Nothing wrong with averaging the market at 10.1, 10.2%. Nothing wrong with that at all. But with just a little bit of extra effort, that certainly makes a big difference over a 35 or 40-year time period in what you're going to have sitting in your nest egg.
Yeah, those top 6 are the 6 most widely followed companies by our subscribers. So we just find it exciting and refreshing that those numbers are as big as they are, because those are powerful. We will talk more about that. All right, Tin Cup is our demonstration of a 401k hypothetical fund going back to the mid-1990s. And the value did reach above $4 million last year, and then the year before that, and it's continuing its recovery. It has actually recovered back to that line of reasonable expectations, thanks to a month where it gained 13.7% in a single month, and we basically call that a good year most of the time. And here's a listing of good years. You were going to say that, weren't you?
I think absolutely. You took the words right out of my mouth. Okay.
I just thought this was kind of fun, looking back at, well, first of all, the S&P 500. You basically see some 8 to 10% returns going all the way back to the year 2000. They say going back over the last 30 years. Tin Cup goes back to 1994. So these are some of those same months. In fact, if you compare them side by side, I find it fascinating that a lot of the same months are over here, but they're bigger over here. They're bigger in Tin Cup. So that ought to be whispering at least a nudge to you. Anyhow, the top month all time was in December 1999, after a particularly nasty fourth quarter back in 1999, and December came back in with huge strength. And then following that recession, the COVID pandemic, that 19.4 that should still be fresh in our memories. But pretty wild stuff. And Ken, are you old enough to remember the fourth quarter of
Yes, I
1998?
am. Yes, I am, Mark.
I put all four of these together here because that's 4 consecutive months. 14-6, 12-3, 9, and 12-2. That's I practically lose consciousness when you think about how powerful that was.
Well, this is, may I use the word bubble? Uh, this was during that .com bubble. I think a lot of this was happening, and all you had to do was attach .com or buy Cisco, and you could make a heck of a lot of money. You had to sell it, however, to really make the money.
Hey, speaking of Cisco, that was just featured as the top beneficiary of AI by a couple of interesting newsletters. So maybe we'll take a closer look at Cisco in the not too distant future either. But again, interesting months here. Just a reminder of how powerful the months can be. I would also encourage you, if you really, if you sit down and you take a look at what was happening during these time frames on the right, the March 2000, the pandemic we've already mentioned, a lot of those big bumps to the upside are following a fairly nasty period when everybody was pretty grumpy about the stock market in the months preceding those moments. And I don't know, maybe we'll use that in our session in January, Ken.
I'm pulling the results up, Mark. We used to run a contest with our board of directors, our Mid-Michigan board of directors, and just you got to pick one stock on January 1st, and then at the end of the year, we saw who won. It was a very easy kind of contest to follow, and we even allowed them to keep the dividends included. But do you know who won the 1998 contest as the best performing stock in the stock market that we picked?
In 1998.
Do you remember Lucent Technologies?
Oh yeah.
That was really a wild stock at that particular point. And we had a woman that was sold on Lucent. She just kept buying it and buying it and buying it. And then she quit the board because she got to be too rich, she said.
Well, the interesting thing about Lucent was the amount of debt that they ultimately had. One of the
Yep.
things, All right, here's some interesting perspective. This comes courtesy of Michael Batnick, one of Joshua Brown's sidekicks. And this is a different way of looking at something you hear about every day. Ken, do you get your daily dose of the Magnificent Seven as you listen
Yeah,
to NBC?
for things like the 1 year contests that people run, or for things like the 1 month analysis that people do, the graph on the left is certainly a vivid display of how much those 7 stocks are dominating the market. But I much prefer the longer term graph on the right, which is comparing those 7 stocks in red to the entire S&P in black. I much prefer that idea that they're not really running away with anything.
No, and in fact, talking to Matt Spielman earlier today, he and I were both basically getting ready to crunch these numbers, and I think this shows what you would hope to, right, Matt?
Yeah, in fact, even that kind of reverting to mean performance is actually skewed quite a bit by NVIDIA. NVIDIA's, and it's hard to say. I took November 1st of 21 to try and match the time. NVIDIA alone, its net improvement or net return is 81.5%. So if you took 1/7 of 81.5% out of that number, it would actually look pretty bad. And they're not all bad. Apple was number 2 at 29%. But if you're a Tesla shareholder and bought during the days of the Model 3, you might also be thinking this is pretty ridiculous, because Tesla is still down 35% from November 21.
Yeah, I actually assumed ownership of Tesla down around 100 about a year ago. So that has worked out pretty well. It went up to almost 300 for a while. Anyhow, here, I don't know. The other thing that kind of comes to mind here is David Gardner and talking about companies like Netflix and Amazon being one of them. If you own these type of companies, you have to be prepared to hold through that sort of thing. And I'm also hearing the whisper of George Nicholson in my ear. If you hold these type of companies in your portfolio, and you have to have what Sean Mace would refer to as diamond hands, um, because David Gardner makes the point that very few people have the fortitude to hang on to a Netflix when the wheels seem to be coming off. And in order to access those very long-term magnificent gains in companies like Amazon, you basically have to have that mentality. And again, Nicholson's words are, if that growth rate is double digits, you got to give them room to run. And every once in a while, they're going to hit a speed bump or a brick wall and get their nose bloodied. But if it truly
Or
is,
just stop for a glass of water, you know?
or just
Uh,
stop for a glass of water, yeah. I
I,
mean,
I'm the one that I'm thinking of, Mark, that I know an awful lot of my friends bailed out right along with me was the former Facebook, Meta now.
sure.
And I just watched all kinds of folks just bail on that company. You know, the old buy low, sell high certainly didn't apply when a lot of folks were running for the doors. When Mr. Zuckerberg suddenly decided he was going to refocus and rename everything, and people got scared, I think, and the stock price reflected that. I want to stand on my soapbox for just a moment, Mark,
Okay.
and just remind people that when you're looking at TV and you're watching them give you 1 month graphs or 2 week graphs or something like that, you should be saying to yourself, that's nothing more than dare I use Hugh McManus's quote of financial pornography.
Okay. You
That
can.
it's you really have to have long-term perspective to be successful in the stock market. And you can sit around and play with these short-term graphs and prove almost anything you want. You even a 2-year graph, probably in the scheme of things, is a little bit shorter than what you would prefer if you had the data. So it just take all these 6 month and 1 month and 2 week graphs, take them all with a huge grain of salt, and ask yourself, what am I really looking at, and what aren't they showing me that they probably should be showing me, if I'm going to really draw a conclusion that makes some sense.
Absolutely. All right. Well, we beat that one up enough. So let's press on. This is a pretty powerful graph, coming straight off of Twitter, now known as X. And this post basically shows the power of some of the stuff we talk about frequently here. What you are looking at is a 45-year chart, literally taking and we're basically making a comparison between the Russell 2000, which is all the small companies, versus the Russell 1000, which are the 1,000 largest companies. As far as I know, there's very little overlap between the two. So what you are looking for here is that black line is plotting the relative performance of the small companies versus the big companies. And so the weakness that we talk about, which now apparently starts somewhere in this time frame here in August or September, with the declining black line that you see here, that is the January effect. And what you're basically looking for is buying the smaller and medium-sized companies in this time frame. Again, our best small companies is based on this to a large extent, and basically trying to take advantage of the oversold conditions, which can happen in the fourth quarter of the year. And then you can see that what Mr. Hirsch is kind of making the point is we're still down at the bottom of that trough, even now after some fairly outsized gains since Halloween of this year. What would you like to add to this, Ken?
Not much. I've already questioned a couple things on the graph, but we can talk about that in weeks to come. I'm a firm believer in the January effect. I've used it at various times. I just want to tell you from personal experience, not every single small stock participates in the January effect. So you still want to buy high quality companies, and you want to buy them at
Absolutely.
a pretty decent price.
Yep, all the same rules apply. Again, here's our reminder. It's our current exercise that we're going to be going through for the rest of this month. And Ken, I have permission to actually show our best small companies list at this point?
I think so. It's not too often that we have 19 greens on total return out of 20 stocks.
So you are taking full credit for the fact that we're not looking at this every week, and that's causing this.
Yes, I am. Right. There's no jinx right now. Okay. So we
Very
can look
little-
at it again in the first week in January, Mark. Okay.
Okay, and Ty Hughes, have you had a chance to come up with your? Because I told Ken I'm just going to blame the performance of the number one stock on Ty Hughes, basically telling America that he likes the company. So, I mean, that's up 73% since Halloween.
And I'm going to do a principle to the audience talk about how you read a report card for your child. Let's focus on all those A's and B's up at the top there, and let's not worry too much about that F down at the bottom. We certainly have a very bright child at the moment who's performing quite well, and let's focus on the success that's going on. We talked about that an awful lot last week. Let's focus at the top. I'm imagining that just the one stock, NAPCO Securities, is making enough to balance out all that red ink in the last column right there, all 6 of those. I didn't do the math, but I'm just kind of guessing that it probably does.
Mm-hmm. And the other one that I want to take personal credit for here is Semler Scientific, because we talked about how we had that company a few years ago that had 3 straight monstrous losing years, and we ducked out of it, and we left it off the best small companies list in the 4th year. It would have been the top performing company that year. Semler's had a couple of weak years. We were tempted to be frustrated with it, and we did manage to convince ourselves to leave it on there. We're knocking on wood. We are only, a month into this, Ken, but these are much more pleasant to look at than other. These charts have been recently for the foreseeable memory that which we kind of put behind us. I am still a shareholder in Western Alliance, for those of you wondering.
As am I. I belong to an investment club, Mark, that owns a lot of Western Alliance, and when Western Alliance went down and hit its low, along with so many of the regional banks, this club was bright enough to realize that we had a good, solid, conservatively run bank with a nice, healthy, long-term trend going in all of the right numbers. And they started nibbling away, 100 shares a month, 50 shares a month, 200 shares a month. And it certainly has paid off huge dividends for that club right now, as it followed Western Alliance back from 20 to now at 50 plus. So if you have yourself a great company and you can't find any good reasons why that particular company is way down, maybe it's an industry problem, and picking out the best in the industry or one of the best in the industry and nibbling away at it, long-term, consistent investing on a regular basis can really pay you handsomely in the long run.
Okay, I think that's probably enough for now, other than to point out that, many of these numbers, this is the least reliable indicator of all, but the 1-year forecasts for the companies down at the bottom that have been a little bit weaker continue to be strong, as is also the case with their return forecasts. So, between the return forecasts and the qualities, pretty favorable. And with that in mind, we'll take a look at our F student shockwave. I don't regard it as an F, or at least it's a temporary condition. Ken provided this brief summary of a situation which still, I think it still holds the same type of promise that we talked about back in October. And what are your thoughts?
Well, I think there's a lot of misinformation out there about shockwave right now. A lot of misinformation about how it removes the plaque from the arteries. It doesn't really remove the plaque. It repackages the plaque and allows it to be pushed up against the sides of the arteries, and that allows then for much better blood flow. I would tell you to go out there. These kind of articles, these really positive articles that are saying things that are really very, very complementary to what the company originally, the idea that the company originally had, are easy to find, and they're easy to bring to your club and to talk about. I'm not suggesting that this is a buy. I'm not suggesting that anybody should own it, but I'm suggesting that it is a company that's in the process right now of reinventing how we handle blood clots in the major arteries of the body. There's a second article I think I gave to Mark as well that talks about the hysteria, and that's the word I'm going to use, the hysteria that people are beginning to have over how the diabetes/obesity drugs are going to change overall medicine. I mean, folks, before any of these drugs can work, people have to take them, and they have to take them on a regular basis. And there's a fair amount of personal discipline that has to go with these drugs. These are not magic Harry Houdini kind of wand drugs where you wave something and it happens. And I think that the article itself, if you read it, this one comes from Artisan Small Cap Fund. I think that the article makes it very clear that a lot of the problems that exist are still going to exist after these obesity drugs become quite common in the general public. Heart disease is not going to melt away. It might reduce itself, but it's not going to suddenly disappear.
Yeah, and the other thing,
Well,
go ahead, Kim.
as an investor, I also want to say that people are also not looking at the effect of people who are using these drugs lose weight. But I've seen where, like Sharon Osbourne of Ozzy Osbourne's wife, she lost weight on it because she needed to, because she was pre-diabetic. But now she's at 90 pounds and she's off the medicine, and she's not, has no interest in eating, and she can't gain any weight. So nobody has really thought about what the long-term effect of these drugs could be.
Absolutely, it's early in the game, and the other thing that we like to point out is Matt did share an article on our forum. If you look under the stocks subsection and under Shockwave, again, in true investment club fashion, we would just simply encourage the club partners to become completely informed. And he gave a link to a New York Times article that talks about another issue that the company is dealing with. And this one was a kind of an abuse by a particular physician. Again, a lot of medical procedures, when done too frequently or too robustly, can be too much of a good thing. And I think that's what this basically covers.
Mark, if you focus on the sentence that's 3 lines up from the bottom, the article focused on arthrectomies, which use a blade or a laser to blast plaque. And this is not what Shockwave, it's not the technology from Shockwave. It just isn't.
So again,
yeah, this happened to come out somewhat before the Q3 earnings call, but pretty coincidentally with the company's big drop down, and that's an important distinction you have to make. And it's tough, you know. Medical, probably even more than technology, is full of jargon, and for good reasons. But it can be tough to understand the meaning of something. But if you think about it, it's interpreted as you know, dealing with plaque in your arteries is a bad thing. But if you read it instead as an alternative that this procedure competes with or might replace is a bad thing, you know, you think about, is that a positive thing? You know, so it definitely pays to put the brain power in. If you need to have a substitute word for things like arthrectomies, because it's just You stumble over it when you do it, that's fine. But you know, if we learned that a unique ingredient in Pepsi was found to be particularly bad in people, but it was something Coke didn't have, you wouldn't think Coke would go down for it. It probably would go up.
Good point. Thanks, Matt. All right. So
Great analogy, by the way, Matt. I'm going to steal it. Okay.
Thank you.
all right. And here's just a quick reminder that on our homepage here for the next few weeks, anyhow, we are going to be taking a look at in the weekly summaries what you see here. Sandy Castor, Matt, and George Mackey had some comments, and there's a few other people that have been involved, but we are going to be digging deeper into the Russell 2000 and finding some companies that we do not currently cover. Those are actually links to some of our analysis summaries, but haven't found anything extremely compelling yet, but some of those are at least modestly attractive. Sandy has been posting on Duolingo, which is a little bit early stage, but that is covered by the Value Line Standard Edition, as is the company Next Tracker. NXT is the symbol there. That's a solar company that is attempting to optimize the amount of energy production by tracking the sun, and that one is also interesting to take a look at. So again, in the weekly updates, and if you watch for this article that basically shows the January effect, that's where we're going to be filing some of this stuff. So just watch for that on the homepage and dig in at your own pleasure. Please, if you find a company on that list that looks compelling, let us know. Here are some of the companies that have actually been added to coverage at Manifest Investing. The bottom one is an exception. I just put that there to make a point. But you can see that there are some interesting return forecasts here, the projected returns and the projected returns on value that you see here. Again, as you would typically expect from many of these type of companies, some of the quality ratings are a little bit on the low side, but I do find this one interesting. You know, here's a relatively small company, Carrot Packaging, that Sandy brought to us. That's a California company out of Chino that looks a little bit less sexy, but could be exciting. The growth rate's a little bit lower, that sort of thing. So anything jump off the page at you, Ken?
Yeah, the second last one above Simulations Plus. I like the total return number. I like the quality number. I like the growth number. And it's gone on to my short list of let's take a look at this one. I wasn't even aware of the company's name. So let's take a hard, serious look at this one. Intracellular therapies. I know nothing about it right now.
Yeah. What do they do? What are they into? The other one that jumped at me a little bit today was, again, semiconductors being all the rage with NVIDIA. This company is Indie. I suspect that Matt Spielman will be taking a closer look at this company. It is up 55% since Halloween, but still showing an interestingly high return forecast, decent quality rating. Again, relatively small semiconductor company that is in the area of autonomous vehicles and some of the laser technologies that Matt talks about. It'll be kind of interesting to see if they have any special niche or product that might grab some attention. So we will be waiting to hear what you have to say about that one, Matt.
Yep.
All right. And then just to make a point, Simulations Plus has been in our community vernacular for several years now. This is a $60 million in annual revenues company. And again, there are many of you out there in the audience are pretty happy with the returns you've had so far. And it's just a reminder that these excellent companies can run, on the small side. And my mission is to hopefully discover at least one, if not two or three, of the next Simulations Plus out there. So that's what we're kind of after. All right. Anything else?
Good list, Mark. Real good list.
Other than I was amazed that that sushi company is a couple $100 million restaurant chain. Good stuff. All right, the ones that do make our list will probably migrate over to the Christmas countdown. By the way, the Bull has been a part of Christmas countdown for years. All right. And with that, moving on to the Groundhog Challenge. Quick update. No changes up at the top other than our champion from a few years ago in the group entry. Orange County is making their run. Kim's still up at the top. I would go ahead, Ken.
Nope, wasn't me, Mark.
Oh, wasn't you? Okay. Well, I thought maybe that was you just gulping because you've noticed that I have moved up in right behind you. Anyhow,
Well, I'm surprised that I'm still one notch above you. So
well, the scorekeeper can fix that. So
I
just have to-
understand that completely. So
I just have to make sure I check it at the right time of day. But I did go down all the way to 45 because this is our two-time defending champion group entry, the Space Coast group out of Florida, and they are definitely within striking distance. The one thing that really did jump out at me this month, first of all, we're back above positive as a group average. That's really cool. It's been a long time coming. But how about this? Kathy Wood, for all of the nasty press that she gets on a daily basis, is all the way back to 38th. And she was 69th a week ago and 105th the week before that. So she's on quite a run. And her fund was actually up 30% in the month of November. And I also want to point out that her relative return is back to a positive number, dating back to the inception of the fund back in 2014. Now, Ken actually had a different spin on that because he's grumpy.
I will say I did do a little research on that too after the beginning too, Mark. So the fund's return is positive in those 14 years.
Uh-huh.
And this is not relative, but the total investor returns, which is something Morningstar does and
Right.
accounts for the inflows and outflows.
Oh no!
That time is just under negative 25%.
Oh my! Ouch!
Yeah, it's a positive, whatever it is, 10, 11, whatever it is for the fund. It's negative 25% for 3 years, 5 years, and since inception. Actually, remarkably steady for those time periods.
Well, we're definitely going to have to dig in and that's the old Peter Lynch story about sitting around the bonfire with all of the people in his neighborhood. And at the time that his fund was generating 20% returns, his neighbors were like sub-zero. And the reason is they performance chased and basically just misbehaved completely, going in at the wrong time, going out at the wrong time. And anyhow, it's a colorful story about how psychology can really mess you up trying to time the stock market. Anyhow. All right. Anything else you want to add to this, guys?
nope, I won't go into my look long term rather than short term kind of argument again, but it's the same argument we had back looking at the graphs.
Yeah, it's just amazing that I sat and listened to a group on CNBC just the other day talking about how badly opportunities were missed by people who hid in CDs and treasury bills over the last year or so. And they were basically suggesting that you do that now. And I'm like, we just don't learn. We just don't learn. All right. Here's a reminder that we do archive these sessions on YouTube under Manifest Investing. We put the roundtables and the bull sessions and any of our educational sessions. I do highly recommend the Mid-Michigan Stock Picker presentation. Watch for the trophy presentation part of that. If you have any questions about the companies that are on that list that we put up just once a month now, because Ken won't let me do it more often, this is the presentation of those best small companies back around Halloween. All right. Just a reminder that that is our mission. And I like these two pictures. Anytime we get to where we're putting together programs for Mid-Michigan or the people in this area, we like to grab pictures. This happens to be the Mackinac Bridge that connects the upper peninsula of Michigan to the lower peninsula. It's a spectacular bridge. And this time of year, you can actually see these wonderful blue ice formations on the shorelines. So I'm thinking about using those type of images for our session a month from now, Ken.
Well, I think that's the northern lights over the bridge too on the left, isn't it, Mark?
Really like that one, the Aurora Borealis.
Yeah.
And that's a good entry to this one. Ken, would you like to explain what we're looking to do in approximately a month?
My chapter had an idea a year or so ago that we were losing a lot of our novice investors, and we were losing them because investing just sounded like it was too big a challenge to do anything about. And so we decided we were going to try to come up with a series that didn't start immediately by immersing you in stock analysis tools, but rather talked a little bit about philosophies and a little bit about how you do things in a reasonable way. Because that's what great investing is really all about. It's making reasonable forecasts over reasonable periods of time. So we're going to run a series of 3 classes on January 3rd and 4th. Details can be gotten by waiting for your email that I think was sent out yesterday. So you might already have it if you're on our guest list. Or if you'd like to drop my wife an email, she'll be glad to send you the description of the classes, as well as a link on how to register for the classes. The first class is called The Grand Experiment, and we're going to talk about this whole concept of long-term investing, why it makes sense, why it works so well for people that don't want to spend 20 out of every 30 days tied to their computers and worried about their stocks, why they want to sleep at night. We're going to move into a class then which talks about making reasonable forecasts. And that's what's so important when you're doing a stock analysis. Mark doesn't have to make the same numerical call that Matt makes, and Matt doesn't have to make the same call that I make, and none of the 3 of us have to make the same call that Kim makes. But it's important that all 4 of us be very reasonable when we make forecasts, and that we temper that reason a little bit to the more conservative side, so that surprises are more apt to be to the upside rather than the downside. So we're going to talk about being reasonable, and we're going to bring into that the whole concept of a business model, top line going to bottom line going to a forecast for the future. And again, we're going to emphasize long-term investing. So our future is going to be 3, 4, 5 years out. It's not going to be 3, 4, 5 weeks in the future. And then finally, we're going to move to helping you find great stocks to study. I think the biggest way that we turn investors off is we say, okay, you know how to do a little bit of our analysis. You know how to use a little bit of some of the tools we have. Now go pick any stock you want and study it. And I think that's not offering enough guidance. I think we need to offer our novice investors a list of good, solid stocks to begin their investing experience with, and to begin their experience with doing stock analysis. Not everybody can study NVIDIA as the second stock out of the gate. It's a much more difficult read. It's a much more difficult set of challenges on your way to coming up with a reasonable number for where will NVIDIA be in the next 5 years. But I think a lot of us can study stocks like Fastenal or Visa or some of the stocks that we've been looking at that are in the top 100, whether it's manifest investing or better investing, or whether it's just the top 100 stocks that we really think are what drives a lot of our portfolios, the good old up, straight, and parallel stocks that are not real sexy a lot of times, but they certainly can give you fantastic returns over the long term. So again, if you'd like to have people in your club or in your chapter or just in your life, if you'd like to have them attend something like this, we're going to be putting the links to those things right on Manifest under upcoming events and getting started. The link's up there right now. You can see the 3 classes and you can register for 1, 2, or 3 of them. Or if you want a descriptor of the classes themselves, send an email to Natalie. She'll send you the descriptor of the classes along with another link that will tell you exactly what's going on. The descriptors are also on the Manifest Investing site for you to read and to consider. Folks, we'd love to teach to 1,000 if 1,000 people came, but we're going to be happy to teach to 100 or so if that's what we get. We have no idea what we expect in an audience, so we'll open it up and we'll see what happens.
Yep, it's also on under the events menu, so you can take a look at that. And I do look forward to the type of reminders that this will provide. Like I said earlier, when we were chatting about this stuff, we're gonna reach out and grab some of the best tools that we both have used over the years and bring it to these sessions. And again, try to take some of the mystery and fear out of it, and really set people on at least a course that has worked very well for now it is 8 decades. So good stuff. All right. So Ken, I know we're not doing this as part of the January presentation, but we do have a future successful investing conference coming up in April. Details to follow, but I just love this chart. This is one of my new favorite one pages for sure. I mean, I wish I could say that I was among the people that went out and bought a few shares of Immunogen when Hugh mentioned it back in May of 2020. This was actually the stock panel for the first COVID cancellation conference. And that is now, believe it or not, Ken, that's coming up on 4 years ago, which is amazing to me. So in 3.6 years at this point, you see the stocks that were selected and covered at that particular conference. By the way, you can access this presentation on the YouTube page. And Hugh brought Immunogen as one of his companies, and that only went from $4 a share to $31 a share just the other day when AbbVie, which, by the way, is also on the list here because Ken picked AbbVie. So they were both basically represented right here in big, bold fashion. So thank you, Ken, and thank you, Hugh, for these two.
I think, Mark, it's remarkable when you can pull together a group of friends, and I'm looking at the pictures of the people that were on this panel, and we're all friends. Pull together a group of friends that have a little bit of knowledge about the stock market, ask them for a couple of ideas each to present, and end up with 8 out of the 12 stocks beating the market over a 4-year period of time. I think it's remarkable. There's no other word for it. This is something that almost everybody can do with a little bit of careful, methodical thought, with some patience and some discipline. Everybody can learn to be a halfway decent stock picker, and some of you will learn to be outstanding stock pickers.
Yeah, this we could do an hour session on just this slide. I mean, Hugh McManus is still likes Aflac, but the reason he likes Aflac, if you get him to go into it, is he's actually betting on what happens to the assets of Aflac if a cure for cancer is achieved, specifically in Japan. I mean, what happens to those reserves? I mean, how powerful would that be for a company like Aflac? And That's one of the things that he looks at. The other one, which to this day, I still just shake my head. Five Below, Cy Lynch, second quarter of 2020, over half of their stores were closed due to the pandemic. And we all teased him about it. And his response was, well, they're not going to stay closed forever. And he was right. And look how well that Five Below, fascinating store, good retailer, and an old Nick Strategos favorite from way back. I mean, my radical pick on the car companies has actually done pretty well. Even with the marketing challenges faced by Budweiser and AB InBev, still performing at a fairly decent level despite those challenges. So EPAM came out of the Ukraine situation just fine. Wow. And they add up to an average output of that per year. So that's fun. It's just fun.
I can't believe a good old fashioned insurance company ended up fourth.
I believe it. That's a better than good insurance company. And I liked it when you made the pick. All right. Anything else you guys want to add to this?
No, except everybody's invited to this as well. It's going to be free. No membership of any kind is required. We'd love for you to become members of Better Investing. We'd love for you to become members of Manifest Investing, but we're providing a nonprofit service to members, and we believe in the mission, the original mission, which is to educate. So let's do that.
Well, speaking of educations, we've got a couple minutes here left. This is kind of a wild thing that we came up with just a little while back. This notion of using this challenge concept of shorting one stock and buying another in a pair, just like a cage match wrestling with tag teams. And so literally what you're looking at here is every single one of these pairs is a theoretical zero amount invested. So zero invested leading to a gain at this point of nearly $600. That's kind of a wow thing. I'm going to actually close my position and basically replace the shares that I borrowed of Jabil Systems, because Jabil is being added to the S&P 500. And the relative strength index has sunk all the way down to close to 30. So I'm going to take my $169 and run and go looking for the next opportunity. I'm going to leave my position on the in mode in place. That seems to be working out all right. And you can see Matt's doing pretty well with the long side of his positions, not getting stung too badly on the short side. This one's a little bit nasty, but not bad yet. So
yeah, this is not how I invest real money, but it's an interesting thought experiment.
And we got it, like it says here, from a Morningstar article, and they've done a couple more since then. I don't know. They had 6 companies that they shorted and 6 companies that they went long on just a couple of weeks ago. So this is a true hedge fund behavior, but I think understanding the mechanics is you can learn a lot from this. One of the things that I was reminded was how difficult it was to go looking for the exact opposite of that which we look for every day. In other words, a company that you don't think is going to do well and go down in value, that we don't look for those. And it's a little bit more challenging, a little bit akin to the challenge we all believe in when it comes to selling stocks. So anyhow, that's just for fun. If you want to join in the fray, let us know. You just have to come up with a company you believe in with all your heart versus a company that you think is headed straight for the toilet. All right? Or at least a temporary bout with the toilet. All right.
Dig your way out of that, Mark, okay? Just keep digging, Mark.
Well, it's been a long time since I prayed to the porcelain gods, so okay, whatever. Hmm. Anything else on the hopper, Ken? You're in the.
I think that this was a pretty decent bull session today, Mark, and I look forward to talking with you again next Tuesday.
All right, so we will continue ferreting opportunities out of that Vanguard ETF known as the Russell 2000 Growth, and it's going to be fun. I expect to actually find some actionable opportunities in that list. All right, take care out there, everybody. Good hunting.
Bye-bye.
Bye bye,
Bye.
all.